Hi, Jeff Morgan with Flatiron Finance, back again today talking about refinancing in general. Probably the most common questions that start off the conversation there are, should I be refinancing and how much can I save? A number of variables come to play there. Generally speaking, if we're having a conversation about refinancing, it's probably because at some time in the past you got a higher interest rate car or truck loan. Normally, a pretty good rule of thumb is you give yourself about 12 to 18 months to establish a track record of payment, and then you're in the window, in the wheelhouse where it's probably a good idea to start thinking about refinancing. How much you can save, will really come down to how much you have financed, how long you have it financed for, and what your current rate is. If I were going to give a couple of examples, recently had a customer a little over a year ago, financed a high dollar truck, started off well over $50,000, financed for 84 months at close to 9%. 12, 14 months in, reached out. We were able to refinance the truck. In his case, he was at 84 months. Really didn't want to go back to a longer term. We structured the deal at 72, so he's picking up right where he left off, staying on track, and we're still able to drop his payment by a little over $100 a month, going down to a little over 4%. Great outcome for that customer. Not a bad rate for a used vehicle loan. Another scenario, and probably more typical, again, another customer, in this case, just starting out on their own, a little over a year ago, financed at 21% just to get started. About 12, 14 months into the loan, great track record established. We were able to refinance at about 6%. In this case, started off with a 72-month loan. Certainly looked at the 60, which was going to save a little over $100 a month. The customer, in this case, actually opted to go back to 72 months and save a little more than $200 a month. Now, in this particular case, the customer's planning on buying a house and recognizing that on a simple interest loan, they can always make a higher payment and pay that 72-month loan off faster, but they're not obligated to it. So when it comes time to talk to the mortgage broker, they're only obligated to the much lower payment. So refinancing accomplished a couple of things. Certainly lowered the payment, lowered the overall amount of interest that was going to be paid, and put them in a better position to be able to go out and buy the house. Everyone's circumstance is a little bit different. Our goal is always going to be to structure solutions that work best for your situation. You have questions or concerns, please give us a call. You can reach us at 970-292-3500 or on the internet at flatironfinance.com. Thanks, and we'll talk again.